are many compulsory imports for India. Compulsory imports means those imports which are necessary for us, without which we cannot move forward. Crude oil is one such compulsory import for India. Now, as we all know that India imports a huge amount, to be approximate around 85% of our total crude oil requirement is actually imported. And the Middle East is marred with tensions. The US-Israel attack on Iran, subsequent closure of the Strait of Hormuz, and then a retaliation from Iran on US and its military bases has led to a huge crude oil shock around the world, and the impact is also seen on India. So now the question in front of India is that can India weather another oil shock? So can we sustain that impact and come out strongly or not? Because now the government is warning us with respect to the high crude oil prices and the crude oil shock, which could test our fiscal health. So we will see what is the quantum of impact that this crude oil shock can have on India, why is that the case, and what solution or way forward we can have in this situation. This and much more is what we will see in today's lecture. So first things first, what's the news all about? So the news is about the Finance Ministry. So we have our Finance Ministry. The Finance Ministry in its economic review has warned that a prolonged rise in the global crude oil prices can affect our fiscal health. Affect our fiscal health means can lead to higher fiscal deficit. Now what is fiscal deficit? The shortfall. Basically a government earns some revenue and spends the money. So the expenditure minus the revenue basically is the difference. If expenditure minus revenue is high, that means you have a deficit. So if your expenditure is higher than the revenue, that means you are having a deficit. And some amount of deficit is enough, but this deficit should be within serviceable range. Our FRBM Act says that it should be less than equal to 3% of the GDP. However, the Finance Ministry has warned us that that can impact our fiscal health and could harm the microeconomic stability in the country. Now, this crude oil shock is happening because of the continued geopolitical tension in Middle East or in West Asia. This report also highlights the risk of fiscal deficit, which I just explained. Current account deficit also. Current account deficit is the difference between the exports and the imports. If exports are less than imports, there will be current account deficit. Also, inflation as well as economic growth can go down as well. So now let us see how much of it will be impacted and what is the way forward for India in this. Before moving ahead, and a small announcement with respect to the new batches that are starting at Legacy IS Academy. Each batch will have a small batch size of maximum 40 students only, wherein you will be mentored, trained and taught by the experts. The new batch, that is the regular new batch, starts on 3rd of August, and the weekend batch, which is suitable for the working professionals or college going aspirants, starts on 8th of August. Once you enroll with us, there are a lot of advantages over other aspirants. Those include, some of them include comprehensive coverage of syllabus, the game changer which I call it, mentorship, one-on-one doubt solving sessions and regular interactions with the educators. A maximum size of 40 aspirants per batch ensures that there is personal attention to every student. There will be daily mains answer writing practice, test series for prelims as well as mains, provides you the one-stop solution for your UPSC requirement. Further, the entire current affairs is covered in 360-degree manner for prelims and mains combined via the live classes. Also, optional is a very important decision for your UPSC journey. We offer 4 of the most popular optional, that is psychology, PSIR, that's political science and international relations, anthropology with the most concise syllabus, and sociology, another optional with very concise syllabus and huge scoring opportunity. So if you are looking for giving your attempt in 27 and 28 for your optional, this is the right time to enroll. The batch is going to start from 17th of August. Now, if you want to enroll with us, you can simply download the app by scanning this QR codes or simply call on the numbers that are mentioned over here. Now, let's continue with the news. So, the question is, why is India vulnerable? Simply because India's import dependence is high for crude oil. India's dependence on imported oil is around 85% of its crude oil requirement. India is world's third largest crude oil importer. Also, crude oil is India's largest import item by value. So the amount of foreign exchange we are spending on crude oil is the highest than any other commodity that we are importing. As a result of which there are major risks like high import dependence, exchange rate volatility. If the dollar and the rupee price fluctuate, that's a risk that we carry. Geopolitical disruptions as well as limited domestic production, which is very less, as a result of which we are dependent usually on the imports. Now, how higher oil prices can affect India? Very straightforward. We are importing 85% of the crude oil requirement, as a result of which if the prices go high, our import bills will be higher. We will have to pay more dollars, as a result of which our foreign exchange will go out. Our foreign exchange will go out if for the imports, because our exports are less and imports are further more. Next is current account deficit. Basically, the export minus import is the current account balance. If export is less than the import, then we will spend more and we will earn less, as a result of which there will be a current account deficit. Further, it can lead to inflation. Why inflation? Because the crude oil prices are higher, so we will pay more for it. So refineries will again produce it at a costly amount. So when it comes out in the market, the crude oil products, let's say petroleum, petrol, diesel, etc., will be cost at a higher amount. When they are cost at a higher amount, other things will also become costly, because transportation is required for transporting literally every good that may exist, as a result of which there will be price increase in the market, leading to inflation. Plus fiscal pressure. Why fiscal pressure? Because we are required to spend more. So when the government is required to spend more, earning remaining the same, there will be deficit which will increase, as a result of which these are the issues that we will be facing because of high crude oil prices. Right. Then there are geopolitical risks as well. What are the risk factors? The regional conflicts that are happening in the Middle East region, shipping disruptions because of the closure of the Strait of Hormuz, the area, because 25% of the crude oil exports and trade is going through this route. It also is an issue, increases the insurance premium of the ships, increases the cost further, so on and so forth. Commodity price volatility will be there, because other commodities price will also increase, because their price also depends on crude oil because of the transportation requirement that is there. Capital flow uncertainty, more money will not be invested in India because everyone else is also using more money to get the crude oil imports. Then the issue of Strait of Hormuz, nearly 1/5, as I said, about 20% of the global seaborne oil trade, which basically passes through this route that is there. Now, any disruption in this route can sharply increase the global crude oil prices, because it will have 1/5 of the impact, 20% of the impact. Now, what are the other risks associated over here? El Nino as an additional challenge. On top of this, if there is El Nino, our agriculture production goes down, so agriculture products become further costlier, leading to more food inflation, leading to even higher, in headline inflation as well. Right. In fact, the economic review done by the ministry identifies El Nino as another downside risk. Downside risk means the negative risk that is there. What are the possible effects? Lower agricultural production, leading to food inflation, weak rural demand, and reduced farm incomes for the farmers. So, what is the medium-term strategy taken by the government? Let's understand that. Building economic resilience. So government expects long-term growth through strategic sectors. What are these sectors? Semiconductor manufacturing, critical minerals, shipbuilding, coal gasification, advanced manufacturing, and supply chain diversification. Supply chain diversification being very important. We need to diversify the sources from where we import the crude oil, so that if there is geopolitical tension in one region, we still have other sources open from where we can import. So we need to diversify that. Plus we need to also earn more money from advanced manufacturing so that we can export that, semiconductor manufacturing so that we can export and earn our foreign exchange. We need to build more ships in our country, right? Shipbuilding is very weak in India. We need to improve that as well. Improve critical minerals also, and coal gasification. Coal gasification can help us replace a lot of imports, because the LPG, that is the liquefied petroleum gas or the natural gas, is also being imported. If we use coal gas, our imports will go down. However, this will take a long time to transition. So these are the steps that we can take in order to lower the impact of the high crude oil prices. Now remember, due to globalization, the world is interconnected, so you cannot make the impact or externality zero, but you can definitely mitigate it.